We are doing the sums that is related to income statement, where you're supposed to make your income statement, your statement of financial position, your statement of changes in equity. Mahar, you have to make everything together. So when such sums are there, your entire sum lies on your markings. Be very mindful of what markings you're doing, because after reading the question, when you start filling in your income statement, your statement of financial position, or your SOCE, the only place that you are going to look at is the trial balance. Okay? You do not have too much of time to come back again, read the adjustment again, go back to the trial balance, read the adjustment again, or go back. There is a systematic method, a normal approach that we follow, and this is what we are planning to learn. Markings is very important. Let's see the markings. When I say share capital, where will it go? SOCE, share premium SOCE, trade and other payables, current liability. This will be NCA, and this is the provision for depreciation, or I say it is the accumulated depreciation. This goes in NCA second column. I hope you know the format of your income statement and your statement of financial position. Okay? So this is one asset that we have, that is land and building. And we have another asset that is plant and machinery, NCA and NCA second column. Trade and other receivables. I'm expecting an answer. Prepayments. For prepayments, you see if it's on the debit side, that means it is prepaid expenses. So it would be current assets. And if you have some pre on the credit side, it would be current liability. I hope I'm with you. 5% bank loan. Need to think properly. The 5% represents the interest. 5% would go in the finance cost. Now, when you're calculating interest, you need to know when have you taken your bank loan. Okay? And bank loan would go where? Non-current liability. Cash and cash equivalent. Retained earnings. SOCE. When I'm talking about the interest paid, all interest paid goes to the finance costs. Now here you need to note one thing is that these two items would or would not relate to each other. Interest paid and 5% bank loan. If I check my 5% bank loan calculator, it's 4,000. 5% of it is how much? If I take my bank loan, which is 4,000, 5% of it is 200. That means if no date is given, I have to pay interest of how much? 200. This sequence should fall in your head. When you read, it should immediately strike to you. When I am saying bank loan, when I say this bank loan, I have this 5%. Whenever there is percentage, you should know that it is danger. Dangerous item. There is a hidden adjustment right inside it which is waiting to take away your marks. Okay? So I have this bank loan and I have 5%. It means that It means what? 5% is the interest to be paid on the loan. So 4,000, if no date is given, I'm repeating again and again. If no date is given to me, 5% on 4,000 would be how much? 200. I make a connection here down. Interest. They mention paid or not. If the interest is in the trial balance, it means interest is paid. How much interest is paid? 100. Interest on bank loan is how much? How much is paid? What does this mean? 100 is outstanding. This is the hidden adjustment that is over here. When we were scrolling through, there was no adjustment related to bank loan. So this is your hidden adjustment which I'm writing in a different color, or maybe I'm writing in red color. Add outstanding O stroke S 100. Do you have any other loan? No. Interest is in which column? Debit column, that means it's an expense. Okay. So that means interest is an expense. You have paid only 100 up till now. You have paid only 100 up till now. What does that mean? 100 is yet to be paid. Okay. I add this 100 over here. Be mindful. This was the hidden adjustment. Okay. Does this end over here? Will this have any other effect? What other effect? Where? Hmm? Outstanding expense. So this is going to go to current liability. I can either write it like this over here, or I can write over here outstanding interest. I will write current liability and I will put 100. When I put this over here, it means that it is yet to be paid and I have to incorporate it when I am solving. Okay, your income statement, I'm repeating again and again, your entire thing of income statement is based only on your markings. You do your markings properly, you score full. You don't do your markings properly, you're gone. Are you with me? Sales revenue, purchases, cost of sales. From limited company onwards, we are not going to describe our expenses as other expenses. We would bifurcate it into finance costs, selling and distribution, administrative expenses. So it would either be FC, S&D, or AE. FC would be finance costs, S&D would be the selling and distribution expenses, and AE would be administrative expenses. To note over here, depreciation on any assets goes in the administrative expenses unless otherwise mentioned. Are you with me? Fine. Distribution costs, distribution costs, selling and distribution, administrative expenses AE. Okay. This limited liability is an error. Inventories, is it the opening inventory? Yeah, this is the opening inventory. Always to note, inventory given in your trial balance is always the opening inventory. In your adjustment is the closing inventory. In your additional information, the inventory that you have would be the closing inventory. In your trial balance, the inventory that you have would be your opening inventory. Are you with me? Yes. Okay, fine. Dividend paid. Now, if it is the dividend that is related to preference shares, it would go in the finance costs. If it is not related to the preference shares, it would go in SOCE. So I immediately go and check. What will I check? So what will I check? Whether this dividend is preference or ordinary share capital? What will I check? I cannot check, yeah. I will check over here whether it is preference shares or ordinary shares. Yes? So when I am checking over here, I only see share capital. If nothing mentioned, it will always going to be ordinary share capital. I hope you are with me. So this dividend paid would be going in your SOCE. This is done. My markings is done. That is only related to trial balance, and that were the adjustments that is related to trial balance. I hope you are with me. I'm still not preparing the income statement. I have still not prepared what? My statement of financial position. I am only working on my markings, if you see. Are you with me? Okay, fine. Now I see over here closing inventory. Where would this go? So closing inventory is subtracted from cost of sales. Please be mindful that we would have a working note for cost of sales. Why will I have working note for cost of sales? Because when I make income statement for a limited company, the income statement looks like this. I want you to write along with me. It would be revenue minus the cost of sales. It's not necessary to put the sign of minus, but I write cost of sales, which would be in my working note number 1. Plus or minus, you don't need to show. What you will get is the gross profit. From that, what do you minus? You minus the operating expenses. What are the operating expenses that we have? So I would say my first operating expenses is administrative expenses. The next one is selling and distribution. Yeah, if there is a lot of thing, then you show it in the working note. If there are like just one plus or one minus, you can show it in a bracket. Okay. After you minus these two, what do you get? After you minus these two expenses from your gross profit, you will get operating profit. What else do you minus? You minus your finance costs. What will you get? Profit before tax. You will minus tax. You will get profit for the year. Okay. Profit for the year is something that will go where? Added to? Added to retained earnings. Very well. Come on. I move ahead. Closing inventory is a part of cost of sales. How about depreciation on your assets? You have depreciation on land and building 2%. You have depreciation on plant and machinery 8%, reducing balance method. Mahad, how do I do the land and building depreciation? Okay, so I'm making a working note number 2. It's very essential that you make working notes. I want you to make the working note along with me on a page. So this is depreciation. I have depreciation on land and building. It's 2% straight line method. When I say straight line method, that means it is on the costs. So I say 8,500 into 2%, 170. Where will this go? So first effect in the administrative expenses, I am giving this working note number 3. Please see the sequence how I'm giving the working note. It is very important. So I'm making my working note number 3. Working note number 3 is for what expenses? Please do it. Administrative expenses. What am I putting? Depreciation on land and building. How much is it? How much is it? 117. Please give me the other place where this depreciation would go. In the NCA second column, I will add to the provision for depreciation. It's land and building, so I will add to the land and building. I'm doing everything in my trial balance. I'm doing everything in the trial balance that I was doing my markings on. I hope you're with me. Now I have depreciation on plant and machinery. I'm making a working note for depreciation. You know that, right? Okay. Come on, depreciation on plant and machinery. How much? So depreciation on plant and machinery, it is the reducing balance method. So cost minus the accumulated depreciation. So it's 5,800 minus 2,900 into 8%. This is 232. Where will I put this depreciation? In the administration expenses, that is my working note number 3. Depreciation on what? How much? 232. Where else? Where else? NCA second column. NCA second column. I will add it to the provision for depreciation. Plant and machinery to plant and machinery. I hope you're with me. Yes, Mahat? Yeah. Very well. Distribution cost is 5,500. Administration cost is 2,900. What does this mean? What does this mean? Lovely. Total distribution cost for the year is how much? 5,500. And total selling and sorry. Yeah, and total administrative cost is how much? 2,900. They are so mindful of us. But will this have any other effect? It will have another effect of prepaid and outstanding. Let's check. I have my working note number 3, administrative. I have my working note number 4, which I can put as selling and distribution costs. Can I? Fine. How much is my administrative expenses? The one that is given to me in my trial balance? 2,933. Are you with me, Mahar? And selling and distribution is given to me how much? 5,468 in the trial balance. Once I take something from the trial balance to my working note for further calculation, that item is gone away. Yeah? Come on. Now give me the total of administrative expenses. Administrative expenses total is 2,933 plus 170 plus 232. 3,335. And selling and distribution total is 5,468. I hope you're with me. I hope you're with me. Yeah? But my adjustment tells me that my final administrative expenses is 2,900. Adjustment tells me your final expense is 2,900. Okay? That means I have found out prepaid administrative expenses how much? 435. Where will this go? Okay. This is subtracted from here. It really does not make any difference to me because I have written the total expenditure for the year. But how about this amount? Where will it go? Where? This will go in current assets. Where should I go and write it? In my trial balance, I will write as current assets, prepaid, administrative expenses, 435. Yes? Come on, can you tell me for selling and distribution? What's the final amount? 5,500. I had from the trial balance 5,468. What does this mean? Outstanding selling and distribution. How much? 5,500 minus 5,468. I have outstanding of 32. Where will I write it? Current liability, outstanding selling and distribution. 32. I hope you're with me. With this, when I read, I see I have completed my entire adjustments. I have completed my entire trial balance and I'm left with the markings. Are you with me? Now I start with my trial balance. I keep on rotating and see where to put what. Come on. We take item by item and start putting. I have share capital, I have share premium. Are you with me? SOCE. So 5,000 and 1,500. Go and write it. Begin down. Because this trial balance is on the first. You'll have to do adjustments. You have to do the other effects of it. You have to add profits. You have to see what is there, what is not there. But still, I'll write it at balance begin down. I've been given share capital, share premium. Done, right? Now I'm going to current liabilities. If I see I have one current liability, trade and other payables. Yeah, I have the other current liability 32. I have this trade and other payables and I have other current liabilities. So in 1872, my trade and other payables would become 1872 plus 32. So I'm striking this off. 1872 plus 32. So this becomes 1904. I hope you're with me. Okay. Where will I go and record this? SOFP. Take your balance sheet. Go to your statement of and take your trial balance. Okay. And go to your statement of financial position. I'll keep the above page for assets and I'll keep this page for equity and liabilities. The liability section would start with equity and liabilities. Yeah. Okay. In my equity and liabilities, I would have my shareholders' funds. Okay. If you remember, this total is my shareholders' funds. This total is my shareholders' funds. So I'm just going to write shareholders' funds. Either I can write this or I can write share capital and I can write reserves. Please write along with me. After that, what do I have? I have the non-current liabilities. I have one non-current liability bank loan. $4,000, I write it over here. Because there is one, I directly take it to the outer column. Yeah, there is no other non-current liability. And then I have my current liabilities. What's the current liability that I have? Trade and other payables. Hmm? 1904. I don't know if there is more or no. So there are no other payables. So I'm putting this directly in the last column. I hope you're with me. So when it's done, I crop it. I don't need it now. Now what do I have? I have the non-current assets. I will take my thing to the non-current assets section. What will I write? Costs, depreciation to date, or I can write provision for depreciation. And I write the net book value. No. I will write my I write my non-current assets. What are the two non-current assets I have? Land and building, plant and equipment. Cost and costs, plant and equipment 5,800. If you see for depreciation to date, I have already shown in my trial balance. So it's 170 plus 424, 594 in brackets. Costs minus depreciation to date, 8,500 minus 594, it's 7,906. But that is for the year. So this would be old plus new. Yes. Similarly, for plant and equipment, it would be 2,900 plus 232, 3,132. Costs minus depreciation to date, it gives me the net book value. I will draw two lines, one full line and one half line. We have done all this in the income statement. Please give me the totals. Sorry? For the non-current assets, it is 10,574. That is the net book value. Could you give me the total as well? One is 14,300. This is 3,726. Be mindful of the lines that I'm using. One full line, one half line. When I'm not drawing a line over here, that means I'm going to continue. Yeah? Come on. Non-current assets is done. Yes? After that, what will I write? Current assets. Please write. Just merge in what? Trade and other receivables. So the prepayments would be merged in. There was no other receivable, right? So outstanding interest is a current liability and prepaid expenses, no other receivables. So what is this 232? Okay, so that was just cropping an error. Okay, prepaid administrative expenses was 435. So do the total current assets please for me. Current assets you will write. You'll write trade, you will write cash and cash equivalent, trade and other receivables. What is the cash and cash equivalent? 485. And trade and other receivables is 4235 plus 15 plus 435. So 4685. Yeah? The total current assets is how much? 5170. Are you with me? Okay. What else now? Trade and other receivables is done. Prepayment is done. Bank loan is done. Cash and cash equivalent is done. Yes? I'll go to my retained earnings. Where will I write the retained earnings? Retained earnings. SOCE. How much is the retained earnings? How much is the retained earnings? 3875. Yeah? Interest paid is finance costs. Take to finance costs 200. It was along with the outstanding. I hope you're with me. Will current liabilities, I see this outstanding finance cost of 100 also. Outstanding interest current liability 100. Where will this go? Outstanding finance cost 100. Yeah, so it will go in current liability. Go and write it. Yeah, go ahead. Retained earnings is written. Interest paid was done. Should I go and incorporate my sales revenue now? 25,840. Yeah, yes. Cost of sales. Can I put it over here? Working note number 1. Opening inventory is 4285 plus purchases 12965. How much is the closing inventory? Closing inventory is 1400. Can you give me the cost of sales? 15850. You got the cost of sales? How much? How much is the cost of sales? How much is the gross profit? Nine thousand nine ninety. Okay. Now dividend paid would go where? In the SOCE. So over here I will add the profit for the year. I would deduct the dividend paid. So my dividend paid is 625. I hope you're with me. I hope you're with me. Okay. Let's go. We filled in everything, whatever information we had. Interest is done, this is done, outstanding was done, outstanding interest is done, depreciation was done. Okay. Now let's find out operating expenses. Operating expenses is 2900 for the administration costs and 5500 what is the total operating expenses? 8400. What is your operating profit? Revenue is how much? Okay, it's correct. So 9090 minus 8400. I get 1590 as my operating profit. Finance cost 200. So my profit before taxes 1390. Minus tax is 0. So my profit for the year is 1390. I hope you're with me. 1390 profit for the year. Where does it go? 1390. So your share capital balance closed down would be 5000. Retained earnings is how much? 3875 plus 1390 minus 625. Your retained earnings is 4640. Are you getting 4640? Okay. And your share premium is 1500. So your shareholders' funds would be 5000 plus 4640 plus 1500. So your shareholders funds is 11,140. Are you with me? 11,140 would go in the shareholders funds. Okay, so we forgot to include our closing inventory, 1,400, in our current assets. So if I include my closing inventory of 1,400 in my current assets, what I'm going to get as my total assets would be the non-current assets plus the current assets. Non-current assets plus the current assets gives me a total assets of 17,144. Okay. Total assets must always be equal to my total liabilities. So my equity and liability shareholders funds 11,140 I got from my SOCE. 11,140 I got from my SOCE. My non-current liabilities 4,000 and my current liabilities was 2,004. So if I add all of this, I'm going to get total equity and liabilities as 17,144. So if you see, my current assets is equal to my current liabilities. Please note over here, the entire story is your markings. You miss your marking, you're gone. Okay. So with this, we complete our first sum, and I would expect you to try the next sum yourself.